Well, it gives me great pleasure now to bring on board Mr. Sumant Katpalia, Managing Director and CEO of IndusInd Bank, to walk us through how things have transpired for the quarter gone by, how things are stacking up for IndusInd Bank, and in general, what is the mood point for the industry. Well, last time when we spoke to him, it was cricket. It is still cricket. The difference is last time it was World Cup, right now it's IPL. Good morning, Mr. Katpalia. Always a pleasure. So nice to have you back.
Thank you so much, Nikunj. Glad to be back in ET.
Let's first start with the big picture. For the quarter gone by, when the environment in a sense for growth has been strong and the environment for deposits or liabilities has been tough, how would you map IndusInd Bank's quarterly performance?
So I think we've kept to our guidance, which we've said we will grow at between 18 to 22%, and that's what our growth has been. Our PPOP margins are in line, and I continue to believe that our ROAs are in guidance between 1.8 to 2.2. So we continue to be within our guidance, and we continue to be range bound on our vectors. The most important thing is with increasing deposit rates, we've still been able to contain our margins between 4.2 to 4.3. In fact, it's between 4.25 to 4.3. So we've been able to manage our margins, and we've not seen a volatility in our margins at all.
So let's address the sort of big elephant in the room, which is that what is happening in provisioning. Your provisioning number now stands at 1,000 crore. If growth is strong, if NPAs are low, then why has the number gone higher?
No, we continue to maintain contingent provisions, and I think these contingent provisions have been maintained to take care of any eventuality on the microfinance business, which is a JLG business. We've always said that we will maintain 2% of the JLG business as contingent provisions and 0.5% on the MHCV business as contingent provisions. So we're well provided on the contingent provisions. If you look at the gross flows have declined quarter and sequentially. And I think we are well within the range which we've set on the credit card as well as on the credit cost as well as on the gross flows.
So let's look at loan growth. Now, sometimes you get myopic between last quarter was 20, why it is 18. Yeah. I'm not getting there, but I'll talk about pockets, essentially the non-vehicle and the vehicle finance. Because that, in a sense, is one of the main markets for, vehicle finance is one of the main markets for IndusInd Bank. Your big vertical, which is vehicle finance, seems to be showing signs of topping out. Is that true, or have you consciously decided to slow it down?
No, I don't think we've grown at 17% CAGR, and I think I continue to believe that this business will continue to grow at 18 to 22% for us. The big thing was that we were changing our systems. We moved out from a very old system into Finacle, and I think there was a 2 weeks or 3 weeks of disruption which happened, and as a consequence the disbursements were low during the quarter. Otherwise, I think the business continues to do well. I think it did a disbursement of 50,000 crores, which we've never done before. I think our diversification on the vehicle finance continues to play well. So we are very, very strong on the vehicle finance. I think on all vectors, whether it's yield, margins, cost of credit, they continue to perform very well. On the non-vehicle side, which is our retail side of the business, we also continue to grow at 38%, and I think the growth is driven on 3-4 vectors. I think we've launched mortgages. That book is growing, so it's growing at 200% because it's coming from a very small base. But you'll continue to see that growth happening. We're continuously growing on the affordable housing side. So we are now at 1,980. We want to take this book to 5,000 crores this year. So I think that's business is growing. Our unsecured, which is the PL and the cards, continue to be range bound. I think while the growth is higher because the base is low, but we continue to be 5% to 5.5% of our book on that business. We've not grown that book at all. We've not busted that range at all on our portfolio. And I think the LAP portfolio could have done better, and it will continue to do better. So I think we've got a very diversified portfolio there, which is doing very, very well for us.
I'll say something which will get a big smile on your face. Are you prepared?
Yeah.
Vodafone or Idea Vodafone?
Yeah.
Now, what was the problem now clearly is no longer a problem.
Yeah, sorry. Correct.
Okay. Now that Vodafone balance sheet, Vodafone or Idea Vodafone, they've raised capital, they have ability to repay their debt. Vodafone Idea, or that was one account where you had provided for in your balance sheet. Now that issue is behind us, what happens to the exposure of Vodafone Idea? See, I told you this will bring smile on your face. I want to capture you smiling.
So I think we had provided for a 990 crore funded exposure on the Vodafone. We've not reversed that provision contingent. We've used 300 last quarter, but I think we'll continue to maintain 1,000 crores as contingent provision because we believe that we should additionally use this for the microfinance and the MHCV business. So that's what we've done. I continue to believe that Vodafone is out of woods, and I think there is no more risk associated with that business. We got paid on February 8th on the Vodafone funded exposure.
The fact that the Hinduja Group stake increase is still with Reserve Bank of India and no decision has been taken, what does that mean for your shareholders?
I think it means nothing as of now. I think we have to wait for the approval to come in and RBI to communicate for us whether the stakeholding for the IIHL is increasing or not. Hinduja is not the promoter. IIHL is the promoter for the bank. So that's number one. Number two, I think the bank is well capitalized as of now, and you would have seen that after paying out the 81, retiring the 81 bonds, which would have impacted our 40 basis points of CET1, we're still very well capitalized, and after taking the operational risk in quarter four, I think our risk weight assets continue to go down, and I think we are well capitalized to not need capital or raise capital at least for the next 3 to 4 quarters.
A point which nobody is talking about, at least for IndusInd Bank, is that if one really looks at the attrition number for IndusInd Bank, it now stands at 35%. Now 35%, our viewers would say, oh my God, 35%, but it is one of the lowest in the industry, which means they've managed to retain talent. And at a time when numbers for other banks are in the range of 55 to 60%, 35% is very impressive. What does that mean for you, and how have you achieved it?
So I think there are 3-4 things on the employee attrition which we worked. I think compensation is a big part, so let's not deny that. And I think the employee cost has increased by 24% year on year, and I think that was well deserved because the bank is doing well, and we wanted to pay our employees well. Number two, I think the type of training and the engagement which we do with our employees has increased tremendously, and I think our engagement, which our HR folks are doing at the ground level, our business heads are doing with the employees, are doing very well. The third, which is the biggest piece out here, we have a continuum. So all our branch managers and all our middle management managers, 70% of them are promoted internally. We made it a principal rule that the continuum is to grow the talent internally. And I think that creates a stickiness in the organization and make sure that the organization has a well-groomed culture over a period of time where all middle management level and senior level positions are groomed internally. I think that's a success of FMCG which we are trying to replicate in the banking sector.
If you continue to maintain this growth rate of about 18 to 22% or 18 to 20%, which means that by rule of 72, in about 3.5 years, your balance sheet would double. Would that be a fair statement that IndusInd Bank has a strong potential to double in 3 to 3.5 years?
You're absolutely right. The only caveat I would like to put on to this is that we will watch the environment very closely. We will watch the geopolitical situation, the inflationary trends, and we will also look internally to our deposit growth. We are very confident of 18 to 22%, but I think these three caveats we will continue to watch out for. So in some quarters, if we go down, it doesn't mean that we will not stick to a guidance to 18 to 22%. The market reacts quarter to quarter. I think we are a long-term annuity business, and you have to look at us as long-term.
If one looks at your internal ratios, I'm assuming that you can grow at 18 to 20% without raising capital for next 3 years. Will that be a fair statement?
I think you have to raise capital when it's available. So we will continue to assess capital. We do assess capital every 6 months. And I think as of today, we don't need capital for the next 2 to 3 quarters. And then we will assess the capital if we think there is an acquisition in mind, or inorganic growth opportunity in mind, or some regulatory changes like the 150% risk weights are coming in, or something will happen. We will go to the market much earlier than what is required.
About Mr. Katwalia is that when I speak to some of his peers, and if they launch a product, if they do something digital, they like to really talk about it. But he's not even mentioned the new app which was launched and which is a fantastic app during the World Cup. So what's been the customer onboarding because of that? How that app has been adding more value to your franchise? Can you tell us more about it?
So I think Indie has been a very successful launch for us. We've already got 2 million downloads and 1.2 million active accounts. I think over a period of time, we are seeing transactions per client go up to 40 transactions per month on this client, which is in line with the market, which is 1.3 transactions a day, which is happening on these clients. We continue to now engage with the branches, and we think that all our mass sourcing will move to Indie. Our engagement levels with these clients are very high. We're seeing the balances build up month on month on these accounts. We are seeing cross-sell happening very strongly on these accounts, and we are adding new features into Indie. So you will see Pioneer, which is our high net worth program, getting added to the Indie program. You will see Indie for NRI getting launched, and you will see wealth management getting launched in this, and all of these are due within the next 6 months. So I think we are well on our track to make India a very successful venture. I only want to tell you that the cost of acquisition of India is about 200 rupees. So it's actually 1/10 of the cost of a physical distribution. So I believe that in the long run, once it stabilizes and it starts seeing growth, we want to add 10 million customers in 3 years in this, and I think it will be a game changer for the granularization of liabilities for the bank.
But are you confident that you will be able to grow your liability book in order to keep up with your deposit growth? Because mane na mane Katwalia Sahab, there is a war of deposits. Everybody wants deposits, and the savers are coming to stock markets. They like to buy banking stocks rather than giving money to banks.
So I think you have to look at two things. We are very different, Nikunj, from rest of the banks. So if you copy a large bank and do liabilities the way others are doing, I think we will lose out in the market. We have not lost out in the market as of now, and we continue to believe a differentiated strategy has helped us maintain the deposit growth. We've grown 14% year on year after losing a large chunk of fintech money, which because of the regulatory change, which had to flow out, and we let it flow out. I continue to believe that our deposit growth is in line with what we wanted to achieve. We will continue to have new initiatives, and I think a differentiated proposition like community banking, micro market strategy, Indie, which is an individual, which is for the individual, Indie for business, for the current account folks, which is coming in. I'm very, very comfortable that the bank will grow at 16 to 18%. Number two, our funding profile is different from the rest of the industry. So if you look at a difference between cost of deposit and cost of funds, it is about 125 to 150 basis point, whereas in the other banks you will find 25 to 30 basis point. That is because we get refinance from developmental associations, which is more stable than even the deposits, and which comes from SIDBI, NABARD or developmental associations at very attractive cost. And these are long-term funding from 3 years to 10 years, which we are able to attract, and which helps us in managing our liquidity as well as stable funding as we go forward. So when I say 18 to 20%, we're very comfortable with our growth estimate which we've given, and we are very comfortable that we will be able to manage our liquidity as well as our stable funding as we go forward.
But one question, Mr. Katpalia. Let me take the clock back, and I'll take the clock back 3 years, just in and around COVID time. That was a testing time for you personally. That was a testing time for the bank. That was a testing time for the sector. IndusInd Bank has managed to survive the storm, all thanks to the hard work which you and your team have put in. Now that from there to here, it's been a great comeback story. But if I take the clock forward from 2024 to 2027, April 2027, hypothetically, what do you think we would be discussing, and what kind of numbers and what kind of profitability you think we could be staring at when it comes to IndusInd Bank?
We don't give long-term guidance, but I can assure you 3 things. I think granularity of our business is given. We will continue to be very granular in liability as well as assets. And I think 2, our financial metrics will be in the top quartile, and we want to be the top 3 players in the private banking space, and we want to see how to make that happen. Number 3, I think the bank will diversify and be a conglomerate, and I think we've said that para-banking is exciting for us, and we want to enter the AMC and the securities space once we get the approval from the regulator.
Invesco is already in the house at a group level. I'm talking about the AMC. Do you still have ambitions to move into the AMC business independently, or are they two not connected?
They're not connected. Banking is an independent activity. The promoter may be IIHL, but I think we continue to believe that we have an opportunity, given our base, to leverage the AMC and a business very well. And specifically, I think from a wealth management perspective, it becomes a very important, important implant which we are missing in the organization right now.
To summarize our today's interaction and just hear me, and please interrupt if I'm wrong. The message from Sumant Katpalia, Managing Director and CEO of IndusInd Bank, is that 18 to 20% growth in the short to medium term is obvious. The capital requirement in the near term is not urgent. Deposit growth looks strong. ROA is looking decent. And the bank is certainly confident that there is no concern on the NPA front. Am I summarizing it well?
Yes, and we will continue to fortify the balance sheet. And for us, balance sheet fortification is more important than anything else.
Your time, and so glad to have you back on ET now.